All right, welcome to the Sunday market breakdown. I hope everyone can hear me. And I will just, as always, just double check that the sound is working and you guys have got me without any issues. All right, sweet. I can see myself live on the screen. That's good. All right, how's everybody doing? Drop me a comment. Let me know where you're tuning in from, which city, which part of the world. It's been a good week in the markets. Actually had my first loss this week in a while, one trade. Well, it was a win and a loss on the same pair in the same day. So, but I'm still counting it as a loss as it was a separate trade. But other than that, it's been very, very busy week. So for those of you that are new, just whilst we're waiting to get started, if this is the first time you're seeing this type of video on my channel, this is the Sunday market breakdown. It's where I look over the trades that I took during the week and break down why I took them and try and share any lessons or insights with you guys on why I took them, and you can kind of just follow along and see the type of trading that I do. The type of trading I do is it is day trading, but it's kind of a hybrid between day and swing. It's very I would say relaxed type of trading in the sense that I just wait for levels to get hit. The specific levels that I take are based on lots of things that are going on, the context of the markets at the time, which is something that I teach in Leveled FX, which the link will be in the description of this video if you're watching back the replay. For those of you who are actually live on the call right now, and you want to check out what that looks like, I'm actually logged in there right now. You can see we're on the live Sunday market breakdown. So inside here, I'm actually teaching people how I do or how I approach the markets. It's basically created for people like me. This is exactly what I would have wanted to have when first starting out. And it's both a training area to train you on the type of trading that I do. So we've got like classroom functionality. We've got the community where people are actually posting in here daily as to like what they're doing. I post in here daily as well, my trade setups or anything that I'm looking at for the day ahead. We've got a weekly call that we do midweek, which is the midweek review. And there's a leaderboard system where you can kind of win prizes for commenting, liking, and just engaging with the community and helping other people out. So it's totally free to join. You can do that. It's leveledfx.com, or you can go to school.com/leveledfx, and that will bring you here to this sign up page. It looks like this. And once you're on here, you just need to click the join now button, which will be available on your screen. It's not for me because I'm actually already inside, but so that's that. This week, let me just show you what's been going on in the market. So this is a breakdown of what we're going to be covering today. Trades taken this week, as I said, why I took them. We're going to look at the week ahead as well, so I'll break down how I'm looking at the market ahead. There's a lot on last week I thought there was a fair bit on the economic calendar for the later end of the week, but next week we actually transition into August. This year is flying by, but because we transition to August, first Friday of every month is non-farm payroll, so we've got NFP data next week, this week coming on the Friday. So we'll either see a very slow market leading up towards that and nothing happening, or we'll see a lot of stuff going on the lead up. It's either one or the other. We've also got interest rate decisions from, I think we'll get into it anyway, but I think it's the UK, and also we've got the Fed interest rate decision. So that's the money printers. I'm going to find out what they're deciding to do on interest rates, whether we're going to have them increased, keep the same, or lowered. So yeah, saying hello to the commenters. Jace Yo saying hi from the Philippines. Hello to the Philippines. Greetings to the UK, a familiar place for myself, although I haven't been in many years. But I hope the summer is blessing you with good weather. And Easy says hello to everybody. Right, there's quite a few trades to get through today. Looking at the breakdown here, I had a GN short on Monday. It was a very early trade for me. I literally just came to the charts. It's not like me to just get into a trade that early on, but we had no real news coming out on the Monday morning or the Tuesday, so it was fairly offensive. Offensive, is that how you say it? The opposite to defensive anyway. So the opposite to defensive, so I was more aggressive with my trading style at the beginning of the week. And you can do that when the market conditions allow. And so when there's usually a lighter week on news, which it was last week, Monday, Tuesday, you can be a bit more aggressive. So I was fairly aggressive, for me anyway, to be taking a very early trade on GN. It did work out. I need to actually put the... So I actually took the G, my microphone's in the way, Pound New Zealand, loss, second trade. It's in my journal, but I want to make sure I cover it on this call, what I did. Pound Yen long on the Wednesday, and then on Thursday it was just like blitz. And because Thursday was such a blitz of a day, I actually took Friday off, which is something you can do as a trader. So I'd already had my bag for the week, and I decided that Friday was going to be a rest day for me. So that's how we played it. James says hello from Spain. Hola. ¿Cómo estás? Right. So I'm going to jump over to the charts. I'm going to look at this Pound New Zealand trade that we had on Monday. So I'm going to hop over to Pound New Zealand. Ah, yes. Here it is. So a couple of things on this. Pound New Zealand. So New Zealand the New Zealand dollar has just weakened over the last couple of weeks. So you can see here, it's just had this major sell-off. Not even, what the hell am I doing? The thing is, I'm still getting used to having a microphone in front of me, so I end up pressing all kinds of buttons on my keyboard. So from the highs, I mean, I won't take it from there, but basically from here, we've had a 265 pip drop on the New Zealand dollar. So it's been a difficult one to trade over the last week or so, but I'm just going to walk you through this trade and explain why I took it. So my trading system, if I can even call it a system, right? It's a trading process, right? So I honestly don't really believe in strategies in the strategy sense, because I'm really just looking for what I think is quite obvious in the markets, meaning that when price is pushed one way far enough, what tends to happen is the only way for people to take their profits from price making a move is to take a trade in the opposite direction. That is, if you're in a buy, the only way to get out is to sell, right? So if you buy dollar with your pounds, the only way to get out of that dollar is to give the dollars back and receive pounds, right? So naturally, there has to be a pullback in the market, and that means that price has essentially gone up one way so far, and for people to get out, they need to now sell. And when people sell, that's going to create a pullback, and it's this pullback that I'm actually looking to trade. And the reason I do that is because then it doesn't matter which way price goes, right? I'm not trying to predict whether price is going up or whether price is going down. Price can go and do whatever it wants. It can either go up or down. I'm just looking for a level to get hit. So for example, here we are on Pound New Zealand. On this given day, price could have come down to here, at which point I'll wait for a level to get hit. And given that the context is still okay for me to take this trade, as in that I don't see any market flows or any reason why this level wouldn't work, then I would take the trade, right? And then I just look to take that. That's it. And I don't need to predict which way price is going to go. Price ended up pushing up. It pushed up to a level. And what did I do when it got to the level? I sold. That's it. So this is my trade on Monday morning. I'll show you exactly what happened. So I came to the charts. My charts are in UK, British time, because otherwise it just messes with my head. I don't know if it's because I'm from England or what, but I just like to know when the London Open is, and I know when the New York Open is in British time. And so I've just always kept it that way, even if I'm coming to you from Thailand. I'm still got my charts in UK time. So anyway, this was the morning. So Monday is market opened. So it was around 5 a.m. It was actually 6 a.m. that this level got hit. And my current time zone was 8 a.m. So I'm usually doing my analysis around 6:30, 7. And so I just happened to have my notification go off, my alert that said that GN was approaching a level. And this particular level, I believe, was a 4-hour level. And I basically just took this level to level. And I'll show you what I mean by that in a minute. So what had happened overnight is we had this big, strong move, which was over 100 pips into the level. So what am I looking for when taking a trade? I need to see a big move in. If there's a big move in, it's the higher chance that there's going to be profit taking occurring at the level, right? So apologies to any of you who already understand how I trade and the strategy, but I think going over it and over it again and again, even for those of you who think you may know exactly how I trade, you may learn something in the details or the minute details of what I'm actually going over. But for you guys that are new, the simplest way to describe how I trade is a strong move in to a level. That's it. And then I just trade the level. I don't really care too much about what else is going on. I do like correlation. I do look for other reasons to get into the trade. But the main thing that attracts me to it is a strong move in to a level. So anyway, we're approaching this level at 6 a.m. If I zoom out, you can see a little bit more about why. Gee, it's not that far out. So this is the level over here. So it's within this wick. So I had a question this week about how I define my levels, right? Why don't I just, for example, why don't I just put a level on the end of that wick like that? Well, you could, but you'd miss a hell of a lot of trades if you did that. The detail is in the wick. What I prefer to trade are the candle body closes. So if the wicks are insignificant enough, like this one's 60 pips, that's quite a lot for me. If the wick's around 30 pips, and I'll just say with the context, the wick size is dependent on the currency. For example, if it's a yen pair or gold or a stock or something like that, especially a yen pair, then I'm usually allowing double for. So like 60 pips on pound yen is nothing, but 120 pips is kind of would be a considerable amount on pound dollar. But on pound yen, I'm quite comfortable with seeing a 120 pip wick. Because it just moves a lot quicker in a given day. So on this wick that we've got here, I drop down to the 4-hour. And this is for the refinement. So I'm just going to come over here, scroll back, and as you can see right here, I've taken the candle body close, and that's reduced the wick size to just 30 pips. And so that's how I defined my level in this case. Right? And some pairs you'll find go off the daily, some pairs go off the weekly, and I'm talking specifically about the candle body close. And so you just need to like be journaling your trades and understand the market. There's no point in me telling you that, you know, pound CAD loves a daily candle body close, because it sounds strange, but you may not find that. It could be the time of the day that you're looking at the charts or whatever. It's just in my trading journal, certain pairs tell me certain things. They just work different ways, right? So, yeah. I've got a question in from James. Can you talk a little bit about alerts? Let me see if I can pop this on there like a professional. Look at that. Can you talk a little about alerts on the 4-hour chart versus other views? What are you looking for in 4-hour and taking those decisions versus 15 minutes and 1 hour? Good question. So I don't look at the 1 hour or the 15-minute chart at all. The only time I look at those charts are when I'm looking for possible exits on my trade. So I've talked about why I get into a trade. It's a strong level, a strong move into a strong level. And how do I get out of them? Well, I take my profits, the majority of them. So I'll take a partial exit on the first area of potential struggle, meaning that the first area where I think price is about to slow down. So if we take the example of this pound New Zealand trade, what am I on? So I'm on the 4-hour chart again now. I only drop down the time frames when I'm doing the replay and showing you guys the trades taken, just so that you can actually see it. If I just showed you, you know, a daily chart, then it's not going to make much sense what happened. because it just looks like this. It's just a mess, right? So that's the only reason I dropped down, is just to show you what happened. So within the hour, with a strong move in, the level worked perfectly, and I traded it level to level. So this I believe was the daily candle body close. But usually what I would do is I wouldn't wait for the level to level to get hit. What I usually do is look for where I think price is most likely to slow down. So if you drop down, we're already on the hourly here, but I can see there's like a wick here, and we had a very small pullback just here. It was like 5 or 6 pips, nothing at all really. But the fact that we had this level here, that's why I decided that price would most likely struggle there. Now, where did that level come from? That's usually when you've got price that's moved up in such a way like this, you usually have to go back and see if there's anything in the way here. So the next candle body close on the 4-hour chart was this level here. So I fully expected price to react a little bit in this region. And so I could hold trades for much longer, and I do, and I'll show you that on other trades that I've taken last week. But the issue is, let me just get rid of that. I just realized I got that still up there. Sorry guys, I'm not very good at the old YouTubes yet. I'm still learning, but for now I'll stick to trading and trying to share a little bit about what I know. So where was I? Yeah, so I do hold trades for longer, but just the partial, because it's important that I pay myself for my psychology, right? I don't want to watch price go 80 pips in my favor and then reverse on itself and then go back all the way back and hit a stop loss. Like, I just feel like an absolute muppet if I did that, right? So I always ensure that I pay myself first. So usually the first area of potential struggle tends to be around, let's say, anywhere between 30 and 60 pips. It's not a given. It's not, and I don't want you to think like that. It's just, that's kind of like, depending on the pair, that it's a smaller trade. Whereas the second area of potential struggle can sometimes be as much as like 100, 150 pips away. But the chances of it getting hit are like 50-50, right? Price can come back. And I actually had 2 open partials on both EURCAD, on my trades here, on EURCAD short and the GN short, both of which came back on the Friday and took me out for break even on the running positions that I still had. So that's why I paid myself when price hit the first area of potential struggle, because I've already been paid, and I just literally didn't even check them on the Friday. I just left them open to run. So either they were going to run down and go, 100, 200 pips away and build up to be, as big as my first partial exit or even bigger, and then I can just close them again. It's just it's like free money, how I see it. So yeah, so that was the GN trade. It was just level to level, nothing special. But I will just cover the loss that I took later on. So this zone here, this white square area you see, is basically this wick over here. I don't know what the best way of me showing you that is, but it's essentially that, right? So from here to here is that white area zoned out. So what I thought was going to happen, it was a bit of a cheeky trade, but because I'd already started off Monday in profit from my first trade that I'd taken level to level, I decided I'd take a second entry at the top of the zone, thinking that the London hadn't opened yet, and that I could probably get away with slying another trade and for the same thing to work out. So what I was anticipating happening was, where I'd already taken the position from here down from the first entry down to the first area of potential struggle, I thought I'd sneaked that one, and that price was actually looking to go deeper into the zone before making a pullback. And I thought it would pull back to the same area again, where I could actually bag 60 pips, like double the size of what I'd already taken. So what I ended up doing is essentially giving back that first trade. So I entered up here at this 2.158 area. It's also a kind of a round number, so it was a nice psychological area for people to trade from. Yeah, I ended up taking a 25 pip loss on that. Because price had gone outside of the zone, I was like, all right, I'm cutting it, because obviously price wants to move higher. So I just moved on from that. So 1 win, 1 loss, no hard feelings. So that was GN on the Monday. Then we had GJ long on Wednesday. So that was those two covered. GJ long on the Wednesday, pound yen. Zoom it out, see what's going on. I love a good yen trade, and it's been beautiful because we've had this pullback now from what has been forever a bull run on pound yen. It's just been going up and up and up and up for a very long time. Question from Jess: do you delete used levels? How do you get rid of useless levels to make the chart less messy? Great question. I do delete used levels. I delete the used levels because I want to exactly do that, keep my charts clean. So as soon as the level's been used, I will get rid of them. If you guys are in the Leveled FX community, you'll see that I do actually delete them in the mornings, but purposes of like going back over these trades and then leaving them on my charts for the Sunday market breakdown, I do actually just keep them here. But that's the only reason. Sometimes I'll remove them during the week and then add them back in on the weekend, like when I'm just going over my trade history and then going, I need to make sure that I cover these on the call. So I'll add them back in. But yeah, absolutely delete the ones that have been used because they're less likely to be used again. There are some pairs that just get used over and over and over again. But in most cases, I don't like to take those levels that have already been used because they do have a less chance of working. So pound yen. This was the 4 hour. Oh, was it the daily? No, it was the 4 hour candle body close from back here on the 4th of June. So if I drop down to the 4 hour chart now. So here we've got 60 pip wick, which on pound yen, to be honest, isn't too bad. But the reason I refined this one wasn't because of the wick size. The reason I refined this one was because we had a gap here of about 30 pips. So when I see a gap, meaning that price closed here and then didn't open in the same position, it opened lower. This can happen on certain brokers. It's quite a normal thing. But when that happens, I don't have a specific level to trade from, and that's why I tell people that I don't trade support and resistance, because support and resistance is kind of like, well, it's kind of like this zone, so I'm just going to enter a trade here because we're in the zone. That's not how I trade. I trade with precision, like absolute precision, and the reason how I do that is from refining the levels. So here you'll see even clearer the gap that we had between the Tuesday here at, what's this, the 6 p.m. candle, and then we went to the 10 p.m. and we gapped all the way down here. So what I usually do when that happens is I take the previous candle and I use that candle body close before the move. So I'd refine the level to this. And is it perfect? Not always, but in this case, let's go down to the hour just to show what happened. In this case, it was actually pretty perfect, even if I do say so myself. You can see here, that was my level. Price absolutely pinned it just here. But one thing that I do always do, and you'll hear me say this time and time again, is I always enter a couple pips ahead. So my pound yen entry, even though the level was 197 basically 0.79, I know that pound yen loves the 0.8 and the 0.2 and the round number. So 0.8, I could see it working, but I always go a couple of pips ahead just because. So I'd be entering on 8.2 because I don't want to miss the trade from a spread, right? And some brokers can do that. I use a good broker, but even they sometimes, it's not their fault. It's just the fact that some of these more exotic pairs, like pound yen is not a major forex pair, so the spread can be a little bit wider, and I don't want to miss the trade, especially when I'm like pinpointing trades as accurately as that, to miss out because I wanted to be, I wanted to save 2 pips. So anyway, this one actually went to first area of potential struggle where I cashed 80% of the trade. Cashed 80% of the trade because my bias on yen pairs is for them to for them to drop. So I don't want to be holding yen pairs forever. And I actually took my second area of potential struggle, and you can see I literally just defined it by these wicks here, the ones that stand out. So on the hourly, here is where I see a wick getting hit. I'm like, okay, so I'll take my first area there, and then the second area just above here. So that's that. But yeah, so that was pound yen. Pretty straightforward trade. Nothing more to say on that really. Level got hit. Price did what I thought it would. Decent trade. 45 pips and then 90 pips to the next level. So decent. Pound Aussie short Thursday, EURCAD. So that was a morning trade, and then all the rest were basically in the afternoon when all things kind of kicked off. So let's cover that now. We've got pound Aussie short from the 19723 area. Oh yeah, so this was up here. This was also a 4-hour candle body close. Really basic stuff. So taken from back here on the 6th of September. Strong move in, strong level, price executed, bit of drawdown. But again, I've drawn out the zone here, so I'm expecting drawdown. So as you can see, we've got the wicks up here. So the fact that we've got these wicks, it's not like the end of the world that we went all the way to the edge of that. The fact that we went all the way to the edge of it is absolutely fine. It's well within my risk structure for this particular trade. And I just draw that on to make sure that I understand we are where we are. And then I can just expect, if price was to breach that and go higher, then I might consider this trade requiring a backup level in order for it to work out. But in this case, everything worked out fine. So a little bit of drawdown, and then first area of potential struggle, it's like 30 pips or so, 35 pips. And yeah, the second area of potential struggle was also hit on this particular trade. So again, pretty straightforward. Guys, if you got any questions about how I take the profits, or if you want me to go into any more detail on that, then feel free to ask. Because I usually spend quite a bit of time on like why I took a trade, but not so much on why I got out of the trade. The most important thing to remember is that I'm taking my profits at that first area of potential struggle. And the reason we do that, again, is because I don't want to look like a muppet when price comes all the way back against me when I was actually right about the pullback. I never know how deep the pullback's going to be. I don't know if there's going to be a point of reversal where we actually see price turning around. The only thing I can do, and this it's not a given every time, but what you can do is you can go back and you can say, okay, well, how strong was this level? The only difference being that last time we were on a downtrend when approaching this, and it was used as a pullback to go lower, right? But from that, I can see that it was a fairly strong level and we had a decent move off it before the next pullback. So we pushed away and then we pulled back into it and then we pushed away again. So from here, moving away, it's a 150 pip move. That tells me it's a pretty strong level before we made our next pullback of like 68 pips to go lower. But I can't use it like, it's like comparing apples to oranges, because this was used in a slightly different scenario, as in we were making a move down and it was used as sort of like a bigger pullback before moving down further. Whereas now we've actually been pushing up for some time. And because we've had this big move up like this, and now it's been used here. But timing is everything, and if it's a strong enough level, then you can expect a reaction. So that's exactly what happened here. James, what does your monitoring of the trade look like? Literally like this. So set an alert on here, right? So first alert would be there. Near level, save. And let's rewind price, so this makes more sense to everyone. And of course now my alert's gone. But basically, if price is coming up, like price would probably be a lot further away than this when I actually set the level, because I'd be identifying this when it was like way back over here, right? I'd be like, okay, if price moved up to this level, I'd be interested in taking a sell. And usually price would be back here at least, because I'd be looking for price to drop lower or go higher. So I'm saying to myself, if price drops lower, this is where I'm looking to take a trade from. And if price goes higher, this is where I'm looking to take a trade from. So yeah, I literally just set the level, alert goes off. I check around the markets. I make sure that nothing crazy has changed from when I made the decision that I would execute a sell trade from up here. I'd maybe look at some correlation as well for like pound New Zealand to align, or any other correlating pair with the pair that I'm looking to take the trade from. So if it was pound dollar, I might be also looking at euro dollar to see if there's any correlation there, and whether or not euro dollar is also aligning with the level. When all levels get hit at the same time, that's the perfect time to take the trade. And that's exactly what happened later on this Thursday, which we'll get into in a second. But when price actually moves in, so there's price hit the level. This was actually I can't remember how quick this trade was, but basically then I just set my first area of potential struggle, and I use CTrader. So in CTrader, I'm not sure if you can do this in MT5 yet. I could be totally wrong. I moved to CTrader when MT4 decided that they were going to stay in the 90s, and so CTrader is a much more, in my opinion, a much more modern platform to use, and with it, they allow you to take what they call advanced take profits. So with the advanced take profit, you can actually set an advanced take profit at your first area of potential struggle. So if you're in the group, I'll be going into this in detail on like how to do this using CTrader, because it's the platform I use. I don't recommend people use MT4, MT5. I think they're outdated and just a bit shit. But I do realize that a lot of the prop firms use them. And if I can, I'll avoid it, and I'll just copy trade onto them from my CTrader account. But and the nice thing about that as well is that the advanced take profits also get copied across. So you can use CTrader and then apply that to other accounts that you might be trading on MT4, MT5, which is cool. So I literally just set the advanced take profit at the level, and that's it. Like, trade's managed, right? And then as price moves away, I might move my stop loss just to cover the highs. I won't move it to break even. I'll just keep it on the last high just in case price does pull back on me. But that's pretty much it. And then I'll keep an eye on it, but it's really only to just make sure that nothing technical doesn't, or there's no technical problems with my advanced take profit getting hit. That's it. And the same thing with the second area of potential struggle. You just drag your second area of potential struggle, advanced take profit down to that level, and that's it. Just let the trade do its thing. So hopefully that answers that question. What interventions do you make? What percentage of your trades are auto exit? What do you mean by auto exit? If by auto, I know there's a bit of a delay on the feed, but if by auto exit you mean stop loss, or you mean just getting out at that first area of potential struggle, that's exactly how I do it. So everything is predetermined. So yeah, I'm not looking to make decisions whilst I'm in the trade. I've already made the decisions before I took the trade, if that makes sense. I think if you're second guessing and taking or making decisions after you're already in the trade, I already think you've kind of lost control of what it is you were looking to do. So yeah, that's how I would manage that. Hopefully that answers your question, and let's move along. EURCAD short on Thursday. This one I had in the group for, I had this on my chart for, I think for over a week. I think it may even be in the last Sunday market breakdown. If we zoom out, I had these two entries, first entry, second entry, and this just goes to show you that like price basically always just hits the level, will always do something from it. Like nothing changed my decision around which where my level was going to be. The only thing that changed was which level I would take. Would I wait for the second entry to get hit, or would I take the first entry? And it just so happened that the context of this trade, the first entry I still governed as fine for me to take a trade from and not have to wait for the second entry, which was a good 63 pips away. So again, with this, I don't want to make these videos super boring, but it's kind of like same old stuff. A level, like this one was refined to the 4 hour. So 4 hour level on EURCAD. And what happened? Price moved in. It was a bit, it wasn't like the strongest move in, but it was still decent enough. It was an 85 pip move in on EURCAD. And for me, that's absolutely fine. It's just we had this kind of like pattern like it wasn't like a big spike up into the level. We had this kind of like wavy stuff as we moved in, but that for me also was kind of like a sign of maybe price slowing down. But anyway, that's the point of the first area of potential struggle. So mine was just set down here. Price moved off in quite a big way. I took 30 pips off the table. That's it. And then I left my runner. And then on Friday, as I said, so I took my 80% partial here, and basically price came back and took me out at break even when price moved up on EURCAD. So that's it really. I had a 50-50 chance of that working out. But the fact that I'd already taken the profits off the table, like I already paid myself, right? So now I'll wait for the second entry up here. That's it. That's literally all I'm going to be doing with EURCAD, unless something crazy happens. We have got quite a bit of Euro news next week, so just going to be a bit careful of that. But I don't see why not at this stage, why that level up there, that's pretty strong in my opinion. And we haven't been here since 4th of May last year. So it's been well over a year since we've been anywhere near here, which is nice. And beyond that, there's not really any more trades for me to be taking until we get up to these weekly levels. So we're a good way, we're about 350 pips away from that weekly level, and then another 300 pips up to the next one. So we've got a bit of time. So really that's the last stop for a pullback in my opinion before we start moving on up. So I just gauge that as we move in. If we've got a strong move in, fine, we can take it. But if it's just kind of like fading up, a fade usually just fades past the level, so I don't like it. That's why I wait for a strong move in, and yeah, that's the only time I'm going to entertain the level is when we get that strong move in. No intervention within the trade. Got it. Yeah. So exactly. Once you're in the trade, don't mess with it. You've already done your thinking. Now you're just executing on the plan. So anyway, that was EURCAD on Thursday, and these all happened at the same time. So EURCAD, Pound New Zealand. So you remember earlier in the week, I took one win and one loss down here on these. Up here, what have we got? Daily level. So if I zoom out on the daily, show you why this was the level. So it's the green line you're looking at here. There it is. No. Just here. So really strong move off of this one by the looks of it. Strong move away. So much so that we're just gapping everywhere around here day to day. But it was a decent level to move off of. And that was it. Strong move in. And we ended up taking that. So with this, same as EURCAD really. Initially, pretty strong reaction off the level. We got, I think the move was, well, in total, if you're including these lows, about 68, 70 pips, something like that. But we had that move off like this, and then price just kind of messed about. And then, as I said earlier, I moved my stop loss to break even for the runner. So I took 80% of my profits, level to level, and left the runner, and then that got taken out here on Friday. So is what it is. Could have gone the other way. If it had dropped all the way down here and done 300 pips, my 20% of the trade that I'd left on would now be larger than much larger than the profits that I took from the 80%. So yeah. When taking the trades, are you calculating break even on a spreadsheet or on the platform itself? When taking trades, are you calculating break even on a spreadsheet or on the platform itself? Not really sure what you mean by that question. One thing I will say is that I do use backup levels and treat that as the same trade. So I think I had on New Zealand dollar. So if we jump to, we'll come to my dollar yen trade in a minute. That was my GN trade. Pretty standard stuff. New Zealand dollar was also, I closed this one early, again, because it's a New Zealand pair, and I just didn't like the price action on it, but I'll just show you what happened with that. So if we zoom out, this was my trade management on New Zealand dollar. So hopefully this kind of like coincides with your question. I'm just going to minimize the question so you can see my screen better. So down here we had the weekly level. So I do my levels like this. Gold is weekly, silver lines are like 4 hour, and then the greens are daily. So we had the weekly down here. This is basically going to be my backup level. So if price came into my level here, which was refined to the 4 hour from this close, and it basically got breached. So if price kept moving against me, what I decided I would do is once this wick was cleared, so once we clear this wick, my trade idea is no longer valid. But my backup level is down here if it gets hit in the same day, right? So what I'm looking to do there is I'll take the loss on New Zealand dollar there, and I'll typically go twice as heavy on the next level down if it happens in the same trading day, not if it just happens randomly some other time. Like, don't make the mistake that this is not revenge trading. I'm not going, oh no, my first trade failed, so I'm just going to aggressively double up on every level we hit next time. No, because there's nothing that will stop price. Price can always keep going, right? But this is a pretty strong weekly level. There's a big move off of that, so I'd expect a reaction. And if that first level had been breached, it just tells me that New Zealand dollar does not want to slow down yet in this day. But at some point, price has to slow down. And if it's still within the same day, remember, I also use average true range on my chart. So at this point, when this price actually got hit on the day that I took it, we were just at average true range, which is basically the distance, the average distance that price typically moves in a day for that given pair. So when it's at the peak of its range, that usually means that it won't go any further, meaning a pullback has to occur. It might not be a big pullback, which is why you can't just rely on average true range. It's the level first. But if you get a strong move into a level and you're on the average true range or past it, the likelihood of a pullback occurring is going to be much stronger, right? So that's the reason why I would take that trade instead of waiting for it to get down here. It would have been quite unlikely for price to really smash past that and still come down and hit the weekly level. But if it did happen, like if it did smash past that weekly level and it didn't stop at the extremity of this wick here, I would take the loss, this wick here. I would take the loss just here and wait for the next move, and I take that to the first area of potential struggle. But I'm going to take it twice as hard because like the likelihood of it working is just that much more, and I have the data to back that up. So yeah, hopefully that makes sense on that. But going into this New Zealand dollar trade, as we're here, price came in, hit this level pretty much around the same time as EURCAD, I believe, and GN. And the same time with the dollar yen trade, which I'll cover in just a minute as well. So that was the last trade just here. So I've not looked at that one yet. But essentially, move into the level, price pulled back. We only got about 20 pips out of it. And I think I closed it for around 12 pips. Just because we had this strong move back in like this. And I was already in EURCAD, GN, and dollar yen. Pound Aussie, I was already out of from the morning. But the EURCAD, the GN trade, and the dollar yen trade was still in play. And the dollar yen trade was a little bit more high risk, which I'll just cover now. So if we look at dollar yen, what happened is this level actually got hit. The level didn't get hit itself, but like my where I had my entry just a couple pips above did quite early on in the day. And what happened here was price moved up, but not all the way to my first area of potential struggle. It did do 70 pips, which was quite annoying to wake up to and see that it had done that. But then later in the day, we had this move down where we kind of breached. With this trade, I did actually, I wasn't minding the drawdown because it was refined to this 4-hour candle body close over here, if you can see that. And the drawdown on that, like 50 pips would have been fine. I think the wick there was, 36 pips. So we didn't have any more drawdown than that. And then price went on to do exactly what I wanted. And so, yeah, it was a really nice trade. And I'm actually still in this one with the partial. So this one took 78 pips off the table. And still running just above, a bit further above now than where I took those profits. So hopefully that's a turning point for dollar yen, and I can hold that all the way up to the next level and then take a trade in the opposite direction. But yeah, that's essentially what I am looking to do with that. So that's pretty much all the trades that we had this week. It was pretty busy compared to previous weeks. Pound New Zealand short Monday morning, took the loss and later in the day, which didn't really need to do really, but it is what it is. Pound yen long was nice. All the yen trades are nice in terms of like the pips that they do. And yeah, then another, the New Zealand dollar closed for 12 pips. It's nothing really, just a small trade. But yeah, the rest of them all worked out pretty decently. So yeah, if you guys got any more questions, feel free to pop them in the box. I'm just going to move on and check out the economic calendar for the week ahead. I believe, yeah, so this is it. So 28th till the 3rd, August the 3rd, yeah. So next week, tomorrow, pretty light on news. So expect kind of like intraday levels to be working better than usual, meaning that probably price won't move that much. And if it does, then there's something else going on in the market that's moving it. I'm just going to check and see. All right, cool. Just checking the time, how we're doing. 45 minutes. So yeah, anyway, so Monday is, it was a pretty calm day in terms of news. Tuesday, what have we got? All right, so just on Monday, just be aware that if you do get into any Aussie trades, that we've got retail sales 4:30 in the morning. That's my time, so it's like 2:30 in the morning London time. So just be aware of that if you are in Aussie trades. And then we've got a bit of Euro news later in the day. Euro GDP between 11 and 12, so expect a bit of volatility on Euro pairs there. CPI in the afternoon. So keep an eye out for that. So could get some big moves on Euro on Tuesday. So again, just if you're going to be entering anything on the Monday that involves the Euro, just be aware that we have got CPI and GDP on the Tuesday. Wednesday, geez, we've got a pretty busy day as well. Aussie CPI. So fairly busy day on Aussie, and we've got the Bank of Japan interest rate decision. Time on that is not given yet, but I'd imagine it's going to be before 6 maybe. So anyway, it's going to be like maybe some moves on the yen. So also keep an eye out for that. I'm in that dollar yen trade. So I don't know, maybe we'll get some more yen weakness in it, and we'll see price continue to fly. It would be nice. What else have we got? Euro retail sales on Wednesday. So pretty heavy week for Euro news. So just have that in mind when you're going in. And in the afternoon on Wednesday, we've got the employment change. Biggie here, we've got the Fed interest rate decision. So obviously that is a big one. So be aware of that. Just got to keep an eye on what happens with the dollar there. Thursday, the Aussie trade balance. And then, let's see if we're still on Thursday. Is that still on Thursday? So Wednesday is the interest rate decision for the US. So just be aware of that. And then, Thursday, we've got the Bank of England's monetary policy and interest rate decision all coming out at the same time. And then Bailey's going to be speaking half an hour after that. So just be aware for pound volatility on Thursday. Basically, it's going to be a pretty mental week in terms of the economic calendar. So expect some big moves later in the week from Wednesday onwards. Monday, Tuesday looks pretty calm, except for the Euro stuff on Tuesday. Swiss CPI on Friday, and then Friday afternoon, we've got a bunch of US stuff coming out, which is, mainly gearing up towards the non-farm payrolls. So that could really get a move on for dollar. I just want to look at the positioning of the dollar, how we ended on the Friday. So yeah, this is classic, just consolidation. Wouldn't be surprised if we saw more consolidation as the week opens, and then even just a drop down to previous levels. Could go either way, really. But yeah, just be prepared for either outcome. I mean, we're equal distances from levels. So, if the dollar takes a massive hit next week, we just want to see where it's positioned by Friday, and then just sort of see on that. It might just be a week might be a super calm week, just because everyone's waiting on data to be released, but you never know. So that's the economic calendar for the week ahead. Got another question here from James. Last question. All good. Do you prefer trades during news releases or prefer to avoid them? For example, pound yen can bounce pretty hard on news and perhaps would breach technical indicators more often. I believe, this is my only belief about the news, I just believe news turbocharges trades, meaning it just speeds things up. So when you look, you hear about people back testing data, doing back testing on their trading to see how their strategy performs. When they do that, I can almost guarantee you that nobody's taken into effect news. They might see a big spike somewhere and say, oh, that's news. But fundamentally, they're still looking at the chart and working on their strategy based on what they see only on the technical side. They're not factoring in anything to do with anything happening fundamentally. So I just believe that levels are levels. And I prefer when there's more news because it gets price moving. The problem is when price isn't moving much, I see traders taking trades that aren't really strong levels. Just people have run out of patience and they just want to be in a trade. So to answer your question, I don't prefer trades during news. It's just I believe that the news just helps speed things up. But I don't believe it fundamentally changes anything that I'm expecting on the charts. If the news comes out and it's bad for the currency, well, if we're near a level, we'll probably just hit the level and then we'll pull back, right? Because price still wants to just go where it wants to go. At least that's my experience, and I have the journal trades to prove it. Can show multiple examples, even on previous videos where I've broken down the market. I think the last non-farm payroll, it was either non-farm payroll or an interest rate decision. But you just see the levels get hit anyway, even if that means that price needs to move a little bit, let's say in a bullish direction when the news should have made it bearish, it will still go that little bit to tap into the level. Other people will tell you that what it's doing is grabbing liquidity before, being able to make a bigger move. I don't care what it's doing. For me, it's just tapping into the level, and we're just seeing the level play out. That's it, really. So anyway, with that, just do a quick run through of anything that I might be looking for this week. I'm just aware of time. We're coming up to the hour, and I want to keep these fairly concise because the longer they are, the harder they are to sort of go back over the replays. So with Pound Aussie, I've not really got much to say on what's going to potentially happen this week. The main things that I might be looking for this week, Euro plays, just because we've got that data coming out. We haven't, if I just zoom right out, I want to look at the weeklies on this. I would personally love to see us tap into this weekly level on Euro. It's 400 pips away, but we've kind of just been in this range for quite some time now. So that's Euro Aussie. Euro New Zealand's kind of doing the same thing, but it is sort of trying to break out now. But I think it's gone further just because of the New Zealand dollar weakness. But if we could tap into these levels above, that'd be great. Only thing on EN is just we've got this massive wick here. It's 1,000. The wick's almost 1,200 pips. So it's going to be a bit of a non-tradable asset for me, that one. But euro dollar, quite a busy chart on this one, so we might have to clean this up for the guy that was asking me about the clean charts earlier. I still keep these daily levels on because to me they're still valid. Probably not so much this one. Go ahead and get rid of that level. The reason being, like, if we had a move into it, it'd only be a 50 pip move in. And then where's my first area of potential struggle? I've not really got much room here on these wicks. So too much of a day trade for me, that one. So just get rid of it. You know what that is. So euro dollar, yeah, here's where my levels are at. Probably going to place another one just down here. And then probably if that level got tapped into, it would be, I believe, more of a break and retest kind of scenario. So just keep an eye on that. I've got a level set there, an alert set there, sorry. EURCAD. Go ahead and remove these now that we've been over it. Actually, I'll leave that one on. Change that now to first entry. So I've not really got a lot past that. Just this up here. Daily candle body close. And then one of the things I do is when the market opens, I'll just look at where ATR is on the chart on Monday, see if it opens up anywhere near that level. If it does, I'd expect it to work. We'll just see how price gets there. If it fades in, becomes less interesting. But if we do get a spike up, like straight up from here, it could be nice. Euro Swiss. Let's have a quick look at pound dollar. Sorry, jumping around a bit here. So we've kind of pulled down. Yep, so 80 pips into the level down here. And if we push back up, nothing for me really on pound dollar until we were to get down here. Even then, it's not the strongest of levels, so I'd need to see alignment from something else before taking a level from here. Pound yen, we've moved off that daily level quite nicely. Next one for me probably be down here. See if there's any weekly levels there. Not really. It would have to be that. Yeah. And if we were to push back up, this zone here might be worth a go to take a trade off of that. That is a 4-hour close, I believe. Yeah, so it's basically from the last pullback here. If we're to get back up there, but we just have to wait and see. Pound CAD has skipped over. I was kind of waiting for these levels up here to get hit, which they still might. It's a bit of a weird spot. Lots of wicks going on here, which makes it less appealing to me. EURCAD we covered. Euro Swiss. I don't really want to see that weekly level worked quite nicely. Beautiful. 60 pips running on Euro Swiss from that. Wasn't the cleanest though. It looks like it moved up, gapped, and then moved up on the Friday. So looks beautiful on the weekly. But anyway, if you're trading those weekly levels, they're well worth it. Like, they're the strongest type. Even Euro Pounds worked off of that. Even 60 pips on Euro Pound. It's a lot on Euro Pound. Euro Yen. Again, nothing really for me until I want to see we get down to the weekly level. There might be some daily levels in this. The only problem for me is like that area there. It's just a lot of messing about. It's kind of like a trickle up Want to see a nice strong move like we've seen off the sells coming from here. Aussie dollar. Not really one I want to touch. There's quite a bit of Aussie news this week as well, so just be aware of that. Aussie Swiss, again, the weekly level would be nice. Looks like this daily level kind of worked. 30 pips are running off of that. I don't like to trade the Swiss pairs off of daily levels though. I just want really strong levels. That worked perfectly off the weekly as well. So weekly close on that would have been just here. But that was a few weeks ago. So on the daily, yeah, not much for me there. Aussie CAD. Also just want to get out of this area and see a drop. Aussie New Zealand. Nope, thank you. Aussie Yen. Just be aware, again, on the yen pairs this week, we've got the Bank of Japan interest rate decision. So have that in mind. If you're thinking about entering a yen pair, make sure it's going to be short and sweet and it's not right next to the news releases. New Zealand dollar. If we were to come down here to the weekly level, I think that is definitely worth a pop. Yeah, 36 pips down to the end of the wick from the level. Yeah, definitely worth a go. So I'm going to go ahead, stick an alert on that. See how we go. If it happens when I'm awake, great. If it doesn't, whatever. Same with New Zealand CAD, really. I think it's going to be a case of like pick your New Zealand pair, choose your weapon, and go from there. I don't like that was a miss and then that was the level. That's a bit confusing. But let's see if the weekly is any clearer. That's a gap, that's why. It's probably that is the actual level. Yeah, that makes more sense. So that would be the level now to get hit on New Zealand CAD. New Zealand Swiss, we are breaching the level, and are we making all-time new lows? It would seem that way. So we're right at the bottom now on New Zealand Swiss. So yeah, for me it's just going to be a sell if we were to pull back up. But right now it hasn't been respecting any of these levels. This weekly level got smashed without much of a pullback there. New Zealand yen, same thing. Just make sure you're careful with the yen pairs. It's a bit cleaner price action for me than some of the others. So maybe we could take some weekly levels. This looks like loads of levels, but the gaps between them are actually pretty decent, like 150 pips for the move. So probably just clean these up a bit. But as you can see, like we've had this move up, move down, move up, move down, move up, move down. Probably just want to clean all of that up because I don't believe any of them are really significant enough. That's now done. So really there's this whole lot here. Again, it's kind of like a fade up and not the easiest to trade. Dollar yen still running long on that, but probably going to close it because it's a long position and my bias is short, so I don't really want to be holding yen trades long. So yeah, but on that one, on the weekly here, so just avoiding that gap. That's going to be my next decent trade on dollar yen. So I'll just stick an alert on that. Dollar CAD. Haven't tapped into those highs yet, so probably a decent trade from up there. If we have alignment with EURCAD as well, if you remember, EURCAD is also same sort of distance away. That would be nice. So if I saw those two line up, that's refined to the 4 hour, those wicks, and we've got a 35 pip potential drawdown on that. Not sure I like that one too much though. 90 pips with a weekly level above. So just have to bear that in mind if you did want to take dollar CAD. Just look for other confluences there. that would help you make sure that was the level. Dollar Swiss is pretty near the weekly level. That could be nice. I've got an alert set there already. Swiss yen, not one for me. Maybe if we got down to these levels, but again, we've got this over here as well, which is a bit messy. So gold, that's the daily. Nothing for me on gold at the moment. I'm not trading it at the moment. And the dollar index was sitting right on a weekly level. So let's move that down here. Yeah, it looks like we might move with that in place. It looks like we may be moving up on the dollar, but like I said, we've got a lot of news this week, so we're just going to have to see it through, see what happens, and trade the strongest levels from however price moves in. So that's the stock market, US 500 slightly on the back foot, US 30 also slightly down, but back up on the Friday, or the week on the Friday back up, back up slightly. So yeah, if stocks continue to fall, we might see the dollar pump up just off the back of the stocks being sold off and exchanging stocks for dollars. But that's it really. So yeah, that's what I'm looking out for this week. And we'll wrap things up there unless we've got any more questions. Jay says, will the lesson of the course be posted this week? Put that up there. Yes, it will. JC may have seen some changes in the community area already. There is some new stuff coming there. So yeah, the course Inside Leveled Effects will be released this week, and then videos daily will be rolled out. So yeah, it's my number one priority to get those rolled out now. So yeah, you can expect that this week. And unless there's any more questions, we're about 7 minutes past the time I allocated for this. So I'm going to wrap it up there. And yeah, let's have a great trading week, and see you on the next one. Cheers, guys. Bye-bye.